Welcome to the latest Lewis Brownlee Talking Points video. Today we will be discussing making tax digital for landlords. My name is Amber Naughton and I'm Client Relationship Manager at Lewis Brownlee, and I'm joined by Stephen Cameron, who is one of the firm's tax advisors. With making tax digital due to come into play in April 2023, all landlords with gross receipts in excess of £10,000 will need to submit a quarterly summary of their business's income and expenses to HMRC using Making Tax Digital Compliance Software. £10,000 is the equivalent of a landlord who earns £833 per calendar month. And with average rent in the UK as of March 2021 at £996, this means a large proportion of single home landlords and multiple property landlords will be impacted. So from April 2023, you will need to keep digital records detailing dates, rental values, income and expenses, send quarterly reports to HMRC using third-party software summarising your business's income, expenditure and profits, make an end-of-year declaration. All of this will be done through your personal tax account, which will securely store all of your tax records. So, Stephen, what is making tax digital?
So MTD is a key part of the government's plan to move to a fully digitalised tax system, with HMRC having ambitions of becoming one of the most digitally tax advanced administrations in the world. The Mtd Initiative is fundamentally changing the UK's tax systems and processes for businesses. It aims to provide a modern digital service that makes it easier for businesses to get the tax right the first time, which not only reduces the tax loss due to avoidable errors, but also reduces the cost, uncertainty and worry that businesses face when HMRC are forced to intervene. The initial focus of MTD was aimed at VAT, with VAT mandated businesses being signed up to MTD in April 2019. By April 2022, all VAT registered businesses will be required to engage with MTD for VAT purposes. So the second focus of MTD is MTD for income tax self-assessment, which will include any unincorporated businesses or property landlords with income in excess of £10,000. Although today we are focusing on MTD for landlords, the same rules will apply to an unincorporated trading business with income over £10,000.
So, why are HMR choosing now to make tax digital?
So HMRC say there are three main reasons behind this, the MTD initiative. These are a digital future, better record keeping, and helping businesses get it right the first time. So a digital future. Most income tax self-assessment, VAT returns and corporation tax returns are already being filed electronically. Many customers are now engaging digitally with HMRC, which is helping to reduce their carbon footprint. With MTD, HMRC also feel they are reflecting what customers are already used to, and nowadays have almost come to expect. For example, we have all seen the difference with online banking. I think it's safe to say nowadays that most people are using a smartphone or tablet to do their banking. And so the idea is with MTD is that it will bring the tax system in line with services like this. Better record keeping. HMRC is adopting technology which will integrate with accounting software, which should help businesses keep their tax affairs up to date as they go along, rather than keeping business invoices and receipts to sort out at the end of the year. Many businesses and landlords are already recognising the benefits of digital record keeping and are actually already doing it regardless of HMRC's plans for MTD. For MTD, this can be done using simpler accounting software or even spreadsheets if appropriate. You may be thinking that you'll need an all singing, all dancing cloud-based software, which is great and really useful for a lot of businesses, but this is not necessarily the case to be MTD compliant. And an Excel or other type of spreadsheet may be sufficient, provided that you have a way of getting the information to HMRC through an API or bridging software. Helping businesses get it right first time. This, we feel, is the main reason behind the changes. HMRC feel that by implementing MTD, they're also helping businesses get it right first time, which in turn will mean HMRC will be paid the right amount of tax at the right time. So at the centre, MTD is aimed at increasing the accuracy of business accounting records and returns to HMRC. In a recent analysis, HMRC believes that up to 8.5 billion of tax revenues were lost in 2018-19 due to what they call avoidable mistakes. By reducing the number of manual interventions involved in preparing accounts and returns, in theory, this will help reduce the number of these avoidable mistakes. Under the current system, taxpayers don't have to submit their tax returns until up to 21 months from the start of the tax year. And if inadequate records have been kept, people will have to estimate their figures. People are unlikely to accurately remember what happened around 20 months ago. And I think it's human nature that we estimate in our own favour.
What will be changing and how does this affect taxpayers?
So there will be some fundamental changes to how the tax system works as a whole. In relation to Mtd for ITSA, these changes will see the end of the self-assessment tax return as we currently know it. From the 6th of April 2023, from where your next accounting period starts, a taxpayer with gross rental income in excess of £10,000 will be required to submit 4 quarterly update summaries of their income and expenses for each period, followed by a final declaration. The filing deadline for each of the quarterly summaries will be 1 month following the end of the quarter. So for example, for the accounting period, the 6th of April 2023 to the 5th of April 2024, the first quarter ends on the 5th of July 2023. And the filing deadline for the first quarterly summary update will be the 5th of August 2023. The second quarter ends on the 5th of October 2023, and the quarterly summary update will be filed on the 5th of November, and so on. On submission of each quarterly return, you will receive an estimate for the tax due for each period, although the payment date will remain the same, being the 31st of January following the end of the tax year. HMRC's thoughts that the taxpayer will have a better indication of what the tax liability will be. They will have more time to budget and plan for making the payment in January when it becomes due. At the end of the accounting year, the taxpayer will just need to submit a final declaration that their quarterly returns are accurate. They will have to add any relevant details of other personal income and tax reliefs and include an end of period statement. As mentioned a moment ago, the deadline for finalising your tax affairs and paying income tax isn't changing. So as with the current self-assessment system, business owners will need to do both by the 31st of January following the end of the tax year. It's also worth mentioning that the quarterly updates will not serve as final legal declarations, so can be adjusted before the end of period statement is finalised. This is one of the points where we will be able to provide assistance. If you have entered something into the quarterly summary that you're not entirely sure about, you can come to us for advice, and if necessary, go back and amend your quarterly summary. For those that fall within the Mtd for ITSA criteria, you will need to register for Mtd through your online personal tax login. For anyone who hasn't already set up a personal tax account, I would highly recommend you do so as soon as possible. These accounts are already very useful, as you are able to access details of employment and pension income, tax coding notices, and your national insurance contributions record. But like I said, you will need this to register for Mtd, so it's worth doing as soon as you get a moment. To help you with setting up the online personal tax accounts and registering for Mtd, there are a couple of useful links now showing on the screen. Just to be clear, landlords with rental turnover below £10,000 will not need to register for Mtd just yet.
What does this mean in terms of record keeping?
So as is the case for Mtd for VAT, those registered for Mtd for ITSA will need to keep their records digitally. Businesses can employ any electronic tool that gives them the ability to keep their records digitally. Keeping records digitally throughout the year and sending quarterly summary updates will remove some of the burden landlords currently face when it comes to preparing their self-assessment tax returns. HMRC expects businesses will use suitable commercial products or accounting software to keep digital records, some of which Amber will discuss with you shortly. Some other smaller businesses with fewer transactions may wish to use other bespoke systems which meet their needs. For example, an Excel spreadsheet, which for these purposes will be sufficient, provided that they are used with compatible bridging software. The idea behind Mtd is that eventually the tax system will be completely paperless. Any paper records that you're still receiving, for example, invoices, rental statements from letting agents or receipts, should be scanned in and photographed so that these records can be kept in a digital format.
What is the Making Tax Digital for ITSA pilot scheme, and is it available to join?
So in 2017, HMRC launched a pilot scheme for MTD for income tax to allow the service to be tested in a limited set of circumstances. More recently, this has been expanded to include more businesses to help HMRC test the functionality of the service before it becomes mandatory in April 2023. But this will also help with those involved in the pilot scheme to get used to the new rules and processes. You may be able to join the pilot if you're already registered for self-assessment, are up to date with your tax records, so no outstanding tax liabilities, have submitted at least one self-assessment tax return, have an accounting period that aligns exactly with the 6th of April to the 5th of April, and have only one existing self-employment income and or UK or foreign property source that was included on your last tax return. If you'd like further information, please do contact the office. I will now pass you over to Amber, who'd like to discuss a little bit more about Mtd Compliance Software.
The two main software providers that are fully compatible with making tax digital requirements are Xero and Quickbooks. Xero has developed new standardised workflows and reports to save time. Xero for Landlords can help with auto-coding and fast reconciliations, dedicated report templates and bespoke landlord chart of accounts, Xero Ask for information requests and checklists, payment integrations to help automate rent collections, reducing the risk of unpaid rent, open banking, which makes information more easily accessible. Tax simplification is making the advisor role more important with things like loan interest. Real-time records and mobile client experience, data gathering and storing permanent records. QuickBooks accounting software is endorsed by HMRC and, as previously mentioned, fully compatible with making tax digital requirements. If you're already a QuickBooks online user, the change should be effortless. All the details of your income and expenses will already be uploaded, categorised and securely in the cloud, ready to be pulled into your personal digital account.
So why adopt now?
It puts an end to manual submissions, which means fewer mistakes and some serious time savings. Quarterly reports show how much you owe in real time. You'll have a single picture of your liabilities and entitlements through your personal tax file. Whenever a big change like this is introduced, there is a significant element of chaos, panic, and pressure around deadlines. Whilst there is bound to be a soft landing in respect of penalties, given the fact that this change is coming and people need to adapt to it, choosing to do it before it becomes compulsory enables people to become familiar with the requirements and the technology before they have to, and whilst the pressure is off. The process should then be easier due to familiarity when it becomes compulsory. So, to summarise, from the 6th of April 2023, all affected business owners and landlords will need to sign up for Making Tax Digital for ITSA via HMRC's website, keep digital business records, use Making Tax Digital Compliance accounting software, send quarterly business income and expense updates to HMRC through the software, finalise the business's income in a declaration which confirms the updates sent are correct and make any accounting adjustments, submit this final declaration to HMRC. This will replace the annual self-assessment tax return. So that was a brief overview. Our social media channels are on screen. Please subscribe for more videos like this one. If you have any queries, please feel free to get in contact with either of us for more detail. And thanks for watching.